Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for September 3rd, 2017. Hope you guys are having a great weekend, and I know for many of you it's a long weekend, as here in the United States we are celebrating the Labor Day weekend, and I know a lot of people are out, but next week is a good week because so many traders and people in the business, in the industry, they come back off of long vacations from the summer, and volumes tend to pick up over the next couple of weeks back to normal levels, which is very exciting for those of us that trade the markets, especially in the currency market. You know, the liquidity becomes better and it's not so thin. So we're all looking forward to it. Now, before we get started, there's a couple fun things I want to cover. Now, I guess before I do that, I should mention, if you want to, try ForexAnalytix, make sure you sign up today. It's only $1, and all you have to do is click on this little button right here. And once you click on that, you can register, and then you get the full entire package for the next 10 days. Now, it doesn't matter if you want the full package or not afterwards, but we give you the full package of all of the types of analysis, once you take your trial. Now, that's not really what I wanted to talk about. I wanted to talk about something fun. This week, we received some new ForexAnalytix t-shirts, and you can see they're actually in my bedroom. It says "No FOMO," and which is no fear of missing out, and then Chief Risk Manager. Really high quality, some of the most comfortable t-shirts that I think you've ever seen. I know they are for me, and just very well made, high quality. Anyway, we're doing a giveaway this week for those. You can take your pick if you win, and all you have to do is you have to tweet to at ForexAnalytix on Twitter. So that would be right here. You have to tweet to at ForexAnalytix. Remember, it's with an X, and all you have to do is let them know what the euro closing price is next Friday. And we're going to take the Bloomberg closing price next Friday at 4:59 p.m. Eastern, the last print, and whoever guesses that right, you get to win a shirt. Now, you have to submit your entries by Tuesday morning, and you don't have to be a ForexAnalytix subscriber to try to win. So anyway, just want to let you guys know that. To learn more about that, make sure you listen to the FACE webinar with Dale Pinkert on Tuesday morning, because he won't be broadcasting on Monday since it is vacation. It is a holiday here in the U.S., but he will be broadcasting Tuesday, and by the end of his show, you have to make your guess. All right, guys, so let's talk about, there's some really key developments that happened this week, and one of them, the biggest one out there, is the dollar. I mean, we gotta talk about the dollar index really quick, and I want to actually take you over to the monthly chart, because what you'll notice on the monthly chart is we close the month on Thursday, not on Friday, but on Thursday. And what happened is we hit that support and we bounced. Now on Friday, the dollar was after the NFP, it was higher. Came off a little bit, but overall it's higher, and it's really posting a hammer candle at some really critical support. As you guys know, the dollar index is probably the most shunned asset class right now. Maybe not all around, but in things that I look at, the dollar has been shunned and just unwanted since the beginning of the year. It might actually have a recovery here. We had a lot of divergence technically. If you look at the weekly chart has been diverging through here, and you can see RSI as we hit that support, and it looks capable of a bounce. Now, how big of a bounce and where are we going to go? I mean, there's a lot of hurdles technically that need to be taken out in order for that to happen. And I think the biggest deal is getting back above this 94 dollar level in the dollar index, and if that happens, then we could see a recovery maybe to 96 as previous support over here. Do I think that the dollar index trend is lower now? I do, but we did hold some pretty key technical levels, and that's important. That's really important going into the big week this next week, especially with the ECB meeting. Now, there were sources, ECB sources, that says that the ECB is not ready to move on any type of monetary policy until at least December. I think that's what it came out earlier this week. And also they are worried about the euro exchange rate at 120, rightfully so. I mean, the euro's been screaming since the beginning of the year, and we've gone from you can see here since 2007, the beginning of 2017, and we've gone through from 105 basically to 120. I mean, that's a 15% increase in value of the euro, which is probably impacting a lot of, it's going to end up impacting tourism. It's going to end up impacting exports for Germany. So I'm sure they're a little concerned about the recent rise and the quite aggressive rise in the dollar. And you can see the euro did an about face earlier this week. But the question is, and I still think the euro is going to come down even further. We're going to probably see this channel support, which comes in just below 118, around 117.75. The question is, how far down can we go, and will we break that support? I mean, if we do, then that will probably set the stage for a further dollar rally. But again, it's questionable, and I don't know if I'd be too bearish the euro. I was expecting a bit of a pullback, and this is what we're getting. You can see relative strength is very divergent here, but again, that might just be that might just set the stage for another rally past 120 or 121 on the next move higher. Now, the other, I want to say, little quagmire that the dollar has here. If you see the dollar again, I'm just going to go pull it up one more time. The dollar index looks like we're going to stage a recovery, but at the same time, if you look at gold, let me take a look at gold here. Gold is rallying quite substantially. Now, gold's at a lot of technical levels. You can see that the relative strength is very overbought on a daily chart. Here's the weekly chart. We just completed a flag pattern. We're well above 1300, and frankly, it looks like the gold market is going to continue higher. It looks like the gold market's going to 1350, or maybe even higher than that, maybe 1375. But it's going to be really difficult for the dollar and gold to move up at the same time. So I think the beginning of this next week, we're going to be looking at, is it going to be gold or is it going to be the dollar? So I think if you're trading the dollar in any way, shape, or form, especially if you're trading the dollar long and you're looking for a recovery, you probably don't want to see gold and silver continue to break out. Now, again, they look a little stretched here, so it might be a case where the dollar continues to rally and gold pulls back. But, gold at the same time, it looks pretty bullish. And as long as we're above 1300, which we successfully tested this week, as long as we stay above 1300, the risk is higher eventually. So that's why I'm a little nervous about the dollar index rebound lasting too long, because gold is looking very constructive for bulls right now. Now, one last note I should make is let's take a look at the S&P. And if you take a look at the S&P is very bullish, and we just hit the 88% retracement, or close to the 88% retracement just this week. And it looks like the S&P wants to hit new all-time highs, and the NASDAQ is up there right now. Let me pull up the NASDAQ really quick. And this is the NASDAQ 100, and you can see we surged into all-time highs in the NASDAQ. So the stock market still look very constructive as well. And so how the dollar is influenced by that, we don't know, but you should go read the blog on our ForexAnalytix webpage, the blog about the US dollar, Japanese yen, and the S&P. As long as the S&P continues higher, the US dollar, Japanese yen should grind higher as well. But if the S&P pulls back, which we're going in that time of the year where the markets could trade a little heavier, that might hinder the ability for the dollar yen to continue higher as well. And last but not least, I want to bring up a cross rate that really, it looks like it's going to roll over. We've been targeting this to the downside, but take a look at the euro pound here. and look at the weekly chart and look at the false breakout on the upside. Okay, false breakout on the upside, and then we have some dark cloud cover. Some might look at it as a shooting star, that candle on a weekly chart. Regardless, the euro pound closed on its lows after hitting new all-time highs. That's typically a very bearish event. When something hits a new low, and like here's a good example, when something hits a new low, okay, and then it reverses, right? If something hits a new high and then it reverses, the problem is it squeezed out a lot of shorts. It got a lot of traders long last week and this week, and then we reverse. So you got a lot of people wrong-footed in the euro pound, which does look like we're going to go back and see 90 pence. And you know, any favorable news that comes out of Brexit negotiations is just going to accelerate that as well. So guys and gals, this is Blake Morrow. You have been listening to the week ahead video. I hope you're having a great, wonderful long weekend, and really looking forward to next week. Make sure that you don't forget to make your guesses and submit your guesses of where the euro close is going to be next Friday to @ForexAnalytix with an X. Okay, make sure you tweet to them and tell them where that closing price is going to be. Hope you guys have a great day, rest of your day. I'll see you next week, especially in the Twitter sphere. Oh yeah, before I forget, traders, one last thing. Could you please like this video? If you're watching on YouTube, click the little thumb button, the thumbs up, and then also make sure you subscribe to this video channel so you can see all of our latest analysis each and every week. Thank you very much. Have a great trading week.